Welcome to Gold Silver Pros.
Hey everybody, this is Rob Kientz with 𝘲𝑠ilverpros.com, and I'm here with a very special returning guest. You might have seen him last year on our channel. It is Gregor Gregerson, the leader and the CEO of silverbullion.com.sg, a leading precious metals storage and sales organization. Gregor, how are you doing today?
Very good. Thank you for having me.
Yeah, I wanted to have you back on because I know we had a great conversation last time about what was going on in the market, and it's been a while. It's been a minute. And man, we've had a lot of stuff happening, and that's what we were talking about prior to the recording. Is the world seems to have changed a little bit, Gregor, and it seems like people are getting interested in precious metals again. What do you think are the main drivers for that?
Oh, well, definitely counterparty risk. I mean, I always tend to joke in some cases that the banks have really helped us recently because since we had Signature and Silicon Valley Bank go bankrupt, I mean, sales have been up 300-400%. And we see that continuing. I think, with COVID, we had a lot of sales, but then average sales afterwards kept on being higher. So more people got interested in precious metals. And that seems to be a similar recurring theme now, where more people are starting to question the idea of just keeping all the money in a bank. So realizing that maybe it's not as safe as it seems. Maybe US bonds aren't as safe as it seems, and maybe having a little bit of precious metals makes sense after all. So I think it's very positive in a sense, and moving forward.
Yeah, I agree with you. And part of that, I think why people are coming back into it is the bank failures. We had a bunch. Nobody's talking about Silvergate, but it had an alternative currency framework set up, sort of like SVB, and then you had Signature. I'm sorry, Signature had Signet. Then you had SVB, and then that was one up by First Republic. So we keep having these bank failures getting bigger and bigger, and we had the second and third largest, and now we have a new second largest in First Republic, JP Morgan, bailing them out. And it seems if you look at the data here in the United States, a lot of time I'll look at the Fed data, and that's on a database called FRED. And one of their things that I look at is for the banking system is deposits, and deposits are flowing out of the banking system like never before. There literally was record withdrawals following these bankruptcies and bailouts of the banking system here in the U.S. So people are pulling their money out, and maybe they're going to gold and silver. Do you think that the bank failures really is what's energizing people, or do you think that people were going to kind of go this way anyway?
Oh, well, I think that the bank failures are definitely moving things along a lot faster. The entire financial system is ultimately based on trust. So when you deposit your money in a bank, 90% of that money usually gets used in some way. It's being invested somewhere. So still being left is 10%. And if people start withdrawing these funds, all of a sudden you can get into trouble. I mean, a lot of these banks ended up getting in trouble because they bought US government bonds, long-term bonds, not expecting interest rates to go up. Then interest rates went up. Suddenly the value of those bonds, which were fixed long-term, ended up crashing. And since they had to basically air their dirty laundry and show that a lot of that what they bought ended up being worth very little. And remember, in 2020, I mean, the US deficit was massive. If I remember correctly, over $2 trillion. The people who bought those bonds, right? These are all people which probably are losing a lot of money now, because these bonds were being bought at 1.5%. Now interest rates are over 5%. The longer the bond is, the more it has crashed in value. And so, people might have been a bit naive, thinking that buy a US dollar bond, it's safe. Yeah, it's safe. You're going to get dollars, but the interest rate, is going to go a lot higher, which means your bond is worth a lot less. And I suspect that there are many, 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 many more companies which bought these things, government bonds or other bonds. And they're just hoping to kind of survive, not to have a bank run, not to have depositors coming in and trying to withdraw funds, because that's when you get into real trouble. And I think any bank nowadays which is trying to raise funds is immediately being targeted. Oh my gosh, there might be the next one. So it's really an environment where I guess you want to keep your head down if you're a banker. And just kind of try to go through it and hope that, but interest rates don't keep on going higher. So as I always like to say, when you go in precious metals, for us, there can't be a bank run because all of the gold is there for depositors. So very worst case, we end up with no gold in the world other than our own. But so there's no fractional banking. Yeah, but definitely, I mean, it seems that a lot of people are starting to question the banking system, and that's likely something cumulative that's going to increase over time.
Yeah, I agree with you. In addition to that, just to throw it out as another data point, it came out recently that we've already had 70 bankruptcies in corporate America this year, and I think the high was something like 133, or recent high during COVID was like 133, and we're only a third of the way through the year. It looks like we're way past that pace. Bed Bath & Beyond was a big one that went out. They're going clearance, and that's really a big name. So when you start seeing stores like that, David's Bridal, these are big names here in the U.S. You're starting to see some brands fall in the U.S. in terms of the corporate side, and I think it may be the same issues. The consumer's not spending as much; they're pulling back. They don't have as much discretionary income, and I think that there's going to be an add-on effect of, as some of these companies go out of business, some of that paper that the banks are holding may go bad as well. Because they were loaning to these businesses. So it's not just the banks that we have to worry about. It's also, isn't it, corporate America that we have to worry about affecting the bank's balance sheets as well?
Definitely. And I mean, I would argue that we are in a stagflation, or we are close to a stagflation, which means we're having high inflation and we're having low growth. And that's a terrible environment for equities because you don't earn much. Your cost of financing is high. So for bonds, it's not necessarily good if your inflation is higher than the interest rate you're getting, because you're losing purchasing power. Real estate is not going to do well in that, because a lot of the price of real estate is based on the mortgage you're getting, and especially when you have variable mortgage rate, it gets a lot more expensive. People can afford the high prices, so that's also under pressure. And really, stagflation is when gold and silver tends to do best, because it is a natural inflation hedge, and it's kind of a good place to park your money, waiting for something better to come on. So the last time we really had long-term stagflations, that was in the 70s, and gold went up an average of 26% between 1970 and 1981 or so. And that's not optimizing the numbers, because it kind of peaked out 1980. So that's just for that stagflation period until the Fed came and said, we're going to raise the interest rate to 20% to really beat inflation. And well, this time around, we raised it up to 5%, and all these banks are going bankrupt. There's no way we can raise it to 20% this time around. So there's only so much ammunition the Fed really has left. And I guess I would argue, you can't go much higher with the rate. So and inflation, I believe, is going to keep on going up. And the reason is it has to do with the way trade is evolving. I mean, if you're looking back over the last 20, 30 years, we had China basically become a big producer of kind of goods at very low prices, right? You might have bought a shirt that's for $10 at Walmart, and China came along and the price went down to, I don't know, $5 or something. And then for a long period of time, essentially, China exported deflation. It kept prices low, because you think about what inflation is. Inflation is just money chasing goods. You can print a ton of money, but it's not going to have any effect unless that money is actually chasing goods. So to have high inflation, you either increase the amount of money chasing goods, or you reduce the amount of goods. So if there's less production of goods, you're going to have inflation, even if you lower the amount of money chasing it. And so what we're having now is the opposite of what we had in the past, because now, instead of having more international trade, we're going the other way. China, I mean, the US is having the CHIP Act and trying to prevent chip manufacturing tools to go to China, but yet most iPhones are made in China. Right. So if suddenly they can no longer make iPhones, or there are less iPhones coming, then that's going to reduce supply. If you got reduced supply, you're going to have more dollars, or same amount of dollars, chasing fewer goods, which again is going to bring up inflation. And so I think that paradigm means that over the next decade, we're going to see high inflation just structurally. It's the opposite of what we had before. We were kind of nirvana before. We were able to have very low interest rate, have no inflation, and just sort of live the high life. And now we're getting the double whammy. And it's probably not something that's going to go away soon. And that's kind of why I think we're a bit where we used to be with the 70s. This is a longer term, stagflationary period probably we're entering. And so gold and silver is probably just at the beginning of that run.
Yeah, I agree with you on that. And I do see, a lot of money coming into it. People are definitely buying it. The retail is doing very well over here in the United States. And I want to, since we had you back on the program, I want to take the opportunity to talk about over in Singapore in that area. How's that area of the world doing? Is it the same story over there? Are you seeing something different on that side?
So Singapore is always a little bit different. Singapore real estate never follows the rules because there's only so much space here. Mm-hmm. And the government just has been very good. It keeps on attracting people because you have low taxes, everything works. So companies want to move here, people want to move here. Mm-hmm. And so our problem is we had an amazing increase in rental prices. I mean, this year rental prices have been going up 50%. So the government is trying as fast as possible to produce more housing and so on. It's getting tougher for people to move to Singapore. There's a lot of money flowing into Singapore. There's a lot of people trying to come here. And so it's quite different because you've got this inflow. Singapore seems to be one of the winners coming post-COVID. A lot of people coming from Hong Kong. I mean, there was a survey from expat in Hong Kong, I think 1.5 years ago, and something like 80% of the people said, I want to move to Singapore. Then the next one, I think, was Tokyo or Bangkok or something. But it was a huge proportion of people which just, because Singapore and Hong Kong were always sort of neck and neck kind of competing. And with everything that happened in Hong Kong, it was this whole fiasco, it's the way they handled COVID. It's Singapore is also it's a big winner. So things are a bit different here. But the government is warning that trade is worldwide trade is probably not going to do that well, and Singapore is dependent on trade. So government is always warning about things. And of course, interest rates went up here as well. And in Singapore, it's not really possible to get long-term fixed loans. Which, with the interest rates going up, there are two big losers, basically. There are people who issued long-term fixed loans, or bought them, which is kind of what the banks did, how to get in trouble. And the other problem are people who borrowed on variable rates and now have to pay a lot more. Right? These are the two groups of people in trouble. And so in Singapore, the banks are very careful, so they never issue long-term fixed rates, which means everybody's more or less on variable. And so those people which try to buy too much real estate are now sort of in trouble. So we've got some of that happening here.
Okay. It's interesting. Probably the thing that stood out to me the most, all of that was interesting, but just the fact that you said taxes are low, everything works, everybody wants to come here. Maybe that's a commentary on where if you want to be successful as a government, that's where you need to go, right? If everybody wants to go to you, obviously that's a good system.
That's why I moved to Singapore 15 years ago. I mean, there was this book from Lee Kuan Yew, from the Prime Minister, called From Third World to First World. And just to give you an example, I mean, in Singapore, the government is divided into ministries of transportation, defense, education, and so on. And so every year, the budget is reduced. So you don't have an automatic 4 or 5% increase, but it's reduced. And that extra money goes in a common tub. And all the ministries have then tried to get that money back out. And that creates competition within the government. So it's a very clever thing. I mean, why wouldn't every government do that? Because it injects the market competition into your governmental entities. And basically, the ministries, they have to come up with a project, how to improve efficiencies, how to provide better service. And so ones with the best project are going to get that money. And so, in Singapore, literally doing taxes here, I mean, we have no capital gain tax. So just imagine not having to worry about selling a stock and paying tax on it, because there's no tax on interest, no tax on capital gains. My interest rate, probably when it's all said and done, personally, is less than 10%. There's no point trying to evade taxes or something. This doesn't make any sense. And the taxes are so simple that you can literally do it in 10, 20 minutes in a year. Many times it's fully automated. All of my governmental sort of stuff I need to do, I just sort of log into the system, some system called ThinkPass, and I get everything done online. I don't need to go to, a ministry or a location. So you add it up. Each thing might be cool, but not like super fantastic, but you keep on adding it up over decades, and suddenly you got the place where everything works. And sometimes you don't realize that until you go somewhere else. You just go, oh my God, how is this like so medieval? So that's I think what makes Singapore, a good place. So it's definitely got a lot of those things right.
Yeah, and you guys have a vault coming. I really wanted to talk about that. You have this new state-of-the-art vault. So let's talk about that, Gregor. What are you guys doing out there? I mean, this thing looks pretty extraordinary. Kind of describe it for us.
Yeah, so we used to have a vault which we built in 2014 or so, and by 2020 we ran out of space. Not with gold. Gold is kind of easy to store, but silver takes almost 100 times as much space by volume and weight. And so we had about 450 tons capacity, and we ran out of that. And as we looked for alternatives, we ended up buying this large, very high flow loading building, 180,000 square foot. We got a really good price on it. We bought it in the midst of COVID. Banks at the time didn't want to lend funds to companies, especially for industrial classified buildings. And so, and it had a unique shape. So all these things combined meant that we just got a really good deal. We got about 40% off the asking price the year before. And one unique thing about this building, it has a 90 kilonewton flow loading. It has a huge hangar-like area, which is about 20,000 square foot. It's about 100-foot high ceilings. And this floor has 90 kilonewton flow loading. Your average car park has about 2 kilonewtons. So this floor is 45 times stronger than a normal car park. And if you're into vaulting, you're trying to store silver, the most important thing you need is being able to put weight on the floor without it cracking. Yeah. Because the more weight you put on a square meter, the more efficient you become. And so our old vault was 10 kilonewtons. So I can put about 1 ton per square meter. With this new vault, I can put 9 tons. And that basically means you have to have the right racking, you have to have the right industrial systems to be able to lift the silver that high, but we can basically stack the silver 40 feet high. That's about 12 meters. And that's creates kind of this canyon of silver. And so we create a very, very efficient way of storing silver, especially, which gives us about 15,000 tons capacity. And give you an idea, that's close to 500 million ounces. That's like 4 JP Morgans. That's all of the silver in COMEX and Shanghai Gold Exchange combined. So we're getting this humongous capacity because we're doing something that's quite unique in the industry. We're sort of taking a vaulting technology and putting this bulk storage system together. And we can basically store 28% of above ground silver reserves worldwide based on the Silver Institute numbers. Of course, we won't be able to fill it up with silver, but we've got other metals like indium, germanium. Indium is a metal that's about $500 per kilo, similar price as silver. And it's gotten too expensive to store. I mean, too valuable to store in unsecured warehouses. So, but it tends to be too bulky for most vaults. So now we sort of we are almost creating a monopoly for that kind of bulk secured storage in Singapore. So that's one aspect of the reserves, the bulk storage. But then we have 2 floors, the 4th and 5th floor, which are for wealth management. We're going to have our offices there. We have 12,500 safe deposit boxes. We received permission to conduct auctions. It's not so much that we want to conduct auctions, but we're looking at Sotheby's or Phillips or Christie's, some of the big auction companies, to essentially use the second and third floors facility for art storage, and then be able to have auctions on the fourth floor.
Oh, that's a great idea. Yeah.
Yeah, we have it's a bonded facility, so it's tax-free, so it's great for art. So it's got, the nitrogen fiber.
I'm going to put this up on screen real quick, Gregor, while you're talking about it. This is something, yep. and this is it, right?
Yes.
So this is something that's always interested me, and not to interrupt you, I'll let you speak again here in a sec. But the cool thing about this is I've always, we have small vaults here in the United States that'll do antiquities along with precious metals. It's really cool that you're doing this in Singapore, because a lot of people that own precious metals own other things. And what you're really doing is saying, hey, we're a full service provider. We can help you store anything you need. And if you're getting in bed with those types of organizations, you guys are going to have, all sorts of opportunity to store stuff for people. So that's really cool that you're doing that, because it's really kind of hard to find. You can find it in pockets here in the US. It's really rare. And one of the things, Gregor, that people come to me the most for on precious metals, but not only precious metals, their artwork, their gun collection, stuff like that. Where do they put that stuff? And there are only a couple of regional spaces here in the US that do it. If you guys are opening a place that people can do it, you're serving a huge market that I think is underserved here in the US.
Yes. Luxury watches is another big thing. So we have a custom vault for watches, which uses winders to essentially store around 2,000 watches. And we have a watch workshop inside the facility.
Oh, watch
which can essentially, yes, it can a high-end one with master Rolex watchmakers and so on. And they can basically authenticate watches, do maintenance. When a watch is authenticated, it goes into this vault. It's got $800 million anyone loss insurance. It's bonded, so you don't pay any taxes. And if, let's say you have a $100,000 watch, you can take a $70,000 loan against it, around 6%, 6.5%. You could accept bids. You can say, I want to put that watch, accept bids at 120,000. And watch owners are a bit like Pokemon hunters. I mean, they are looking for that specific watch. So the idea with this facility is, just as you put it, to have precious metals, to have industrial bulk metals, valuable ones, to have luxury goods, and to have art. And that combination of things, will hopefully get I mean, there are a lot of people which really like luxury watches, especially in Singapore. I would almost say there are probably 30 people who like luxury watches for every person who's interested in gold. Mm-hmm. And so the way it's designed, you want to go to that watch vault, you're going to be passing this 20-foot by 8-foot window into the world's biggest vault. And you can, at about 40-meter height, and you can look down into that. And so hopefully that's going to, get the person somewhat interested in gold and silver. And so you got all these synergies coming from these different asset classes. But what combines them all, they're all physical, essentially. So all the kind of stuff which a bank wouldn't touch, and which in many ways we're able to use that space and combine these different synergistic effects. Plus we can host events. So we have space for about 120 people for high-end server event. Actually, we already had high-end fashion labels wanting to book event space in it, because the building is very iconic to our sense. We're having 3,600 square meters of onyx lighted from behind, which kind of gives that impression. So when it's all done, it's meant to be essentially an alternative asset center. It's meant to symbolize the resurgence of physical goods, especially silver and gold, as a mainstream investment for, the mainstream investor, to kind of bring it back. Because the 1780s, we had, if I'm not wrong, I think over 8% of US funds were invested in precious metals. Nowadays, we're maybe 0.5% or maybe a bit more, but I think there's definitely a lot more people which ought to be coming into the space, and with having the reserve, we think we can get some media attention. I think we can get people talk about it. Hey, why do these people build this crazy building? Is there really a market for this, right? I mean, people start asking these things. I mean, Bloomberg and is keen to come in, take photos, and put it on Getty Images to get royalties off of it. So I think once it's done in November, December timeframe, I think we'll definitely have a lot of publicity around it.
Yeah, and I think the fact that you're doing this speaks to the interest, not only in antiquities and who's getting involved in the gold market, but just the amount of raw demand. If you guys are able to hold that much gold and silver, as a percentage of what we have, what's available, that's pretty big, and definitely you guys will become a big player there. And the fact that Singapore seems to be this friendly jurisdiction, it really kind of symbolizes what America used to be many, many years ago, and maybe has changed from that. And it could be a good place for people to trust and say, okay, it has the right laws, it has the right facilities, it has the right company. And I think that's what people are looking for. It seems like you guys kind of have all three. Could you summarize, for the viewers, we talked about the vault and we talked about what's going on in the economy. What do you see, the rest of this year, Gregor? What's your worldview on what happens? I just wanted to kind of get a few minutes on that.
Well, I like to follow Ray Dalio. I always say if you're going to take advice on finances, take it from the guy who made a lot of money, and Ray Dalio is the most successful hedge fund manager. So, and he's sharing so much of so many insights. So, and here's this sort of 6-stage sort of cycles that countries tend to go through, and it kind of seems that we have all these internal conflicts in the US, but other countries as well. In Germany, there's also more division, I kind of feel. You have the external conflicts, and then you got all this debt kind of mounting up. So you got all these three sort of things coming in, and then you've got this conflict with China, and how much of that is real, how much of that is made up, how much is just people sort of building it up. That's one thing. But what I think that if the US keeps on having things like the CHIP Act and sort of, let's say, starving or trying to starve China from a very essential sort of trade resource like these chip manufacturing things, at some point China might retaliate. And what I mean with that, what if China at one point were to say, I no longer accept the US dollar, and or before they do that, they just sell all of the bonds, US bonds, and they don't accept US dollar anymore. And that would create a huge problem, because China is something like 30% of world trade. And all the countries trading with them would suddenly have to get some other currency, whether it's the yuan, the euro, whatever, whatever is acceptable, but not the US dollar. And so that would suddenly cause a big decrease in demand for the US dollar. And my guess is that the US would say, well, that's a financial attack. We are not going to take that so lightly. And maybe the US is going to say, from now on, all Chinese companies are now embargoed. No bank is allowed to send funds to a Chinese company. And of course, you can't really do that because they're just too big. So, and if you do that, you're going to have the fracturing of the financial system. You're going to have some banks saying, okay, I'm the American following bank, and okay, I'm the Chinese following bank. And then some will say have to trade between themselves. And you just got this absolute chaos, which could happen. It doesn't mean it will happen, but I think the possibility of that happening is becoming greater. And I mean, Ray Dalio recently said that, the US and China is at the brink of, they're not talking to each other anymore. Right. And, trade is something that gets people together. When you get rid of each other, you're not going to want to fight. But the trade is diminishing. All these trade sanctions and other things are happening. It just makes things more volatile. And I'm not sure we're going to have a hot war. I see that a financial war can be very destructive.
Do you think we'll go into like a Cold War, or do you think we're already there with China?
I don't think China really wants that. It's just that here's the question. I think ultimately, if China keeps on going, and let's say they become the biggest economy in the world, what's so bad about it at the end of the day? The question becomes, are you more concerned about your relative status versus somebody else? Like, you need to be number one. You cannot live with the fact you're number two. Or are you more concerned about just having growth and everybody becoming wealthy? And, oftentimes we humans, we are more concerned about relative growth compared to absolute growth. So if China grows faster, well,
we need someone to grow, Gregor, because the Western world ain't growing right now. And let China grow. Yeah.
Well, there's a whole universe out there. I'm a big fan of going to Mars, of going to the asteroids, of expanding out. So that whole idea that our resources are finite, and if you have it, I can't have it, so I need to knock you over the head to take your resource. What's the purpose of it? If you've got a whole solar system, you got a whole galaxy out there of resources. It's sort of like when we were all back in Europe, medieval ages, dying at age 34 as peasants with no real expectation in a feudal system where you had nothing to look forward to. And then we discovered the New World, right? Then we discovered the Americas. And while, not everything that happened was great or proper or so on, it did change the world. It gave people an option of saying, I don't want this king which is gonna, work me to death. I'm just leaving. I'm trying to get the ship to the US. And not the US, but to the New America colonies, right? Because I'm valuable there, because they don't have enough people. And I can make, my new home stand, right? That's what created the US. It was the frontier. It was that whole can-do build sort of world. And it's no longer like that. But let's say we create a colony on Mars, right? Then we can build that up again. We can have that again. If we get fusion power, right? We can solve so many problems. So there's a lot of good things in the world that can happen. Why do we have to sort of antagonize each other to the point where we could go even a financial war, which we don't need, let alone a hot war? And yet we seem to be going in that direction, as 𝘰𝙁 is pointing out. This happened many times in history, the British Empire, right? And so on. And
I agree with you. And a lot of what we've talked about on the channel is every 250 years, so John Glubb did this research, every 250 years you have the rise of a new nation state. That's just the nation state cycle, dating back to the Romans and Assyrians. Rome was a little different because they had two societies, but for all intents and purposes, each nation state adds something to the world, but then people are ready to move on. And like you said, we came to the new world over here. That was the last bit of the new world I feel like we hadn't explored. I think Africa, to some extent, people are exploring that, but you do already have infrastructure there. So the next push is going to be a space. And it's something we talked about on the program a lot. I mean, Nokia's got a contract to build 4G on the moon. It's on their website. And I was in telecom, and that's a legitimate contract. We know this in telecom, that they want to push out into space because they do know that we're growing, and they do know the only way, for society to grow is go beyond our existing borders. But I think, Gregor, that's such a hard thing for people to accept, that this is why I think one of the reasons we have all this conflict we have now is, one, people aren't used to the idea, but two, we're in this zero-sum mode where it's, I have to take something from you, not the abundance mentality. And I think the transition for the world to get to a greater state of peace is we go to an abundance mentality where we say we can help each other, we can grow, but we need to work together in order to do that. We can't be, so jingoistic or so isolated.
Well, some competition is good. I mean, you want competition to get something done. You look at the fusion reactor ITER, which is always 30 years away. Because people there just both so many languages they speak and so on, instead of actually. So competition, the Elon Musk of the world, which really changing the world. And China now is trying to copy Elon Musk, right? Building reusable starships. That's the new goal. But he sets the standard. He sets the standard to something which is really going to change the world.
Yeah.
So, and then so we want to have some competition, but there's got to be a balance. We don't want to end up blocking each other and hurting each other over it. So, so coming back to the general question, how it's going to go for the end of the year, I always hope that tensions are going to sort of, even out and so on. But I believe, if things are going to come to a head, it's probably going to happen in Hong Kong. And the reason is Hong Kong basically is the banks. They're all US controlled banks ultimately. I mean, they're all part of the SWIFT system. HSBC, which stands for Hong Kong Banking Corporation, by the way, they had to close the bank account of Carrie Lam, which was basically the president of Hong Kong. Now imagine that Bank of America has to close the bank account of Joe Biden because some outside power says so, right? I mean, it's a huge embarrassment, right? It just shows how little saying sovereign countries have with their own banks, because the US can kick them out of the SWIFT system, cannot make wires, and the bank is finished. So I think that creates a certain resentment. Well, I don't think it does. And so the Chinese in Hong Kong basically made laws and saying, oh, it's illegal for you to carry out these sanctions. And so now if you're a banker in Hong Kong, I mean, you're in trouble, because if you don't follow US directions, your bank gets fined billions of dollars and gets in big trouble. If you do follow them, you're contravening Chinese law in Hong Kong law. And the only reason nothing has crashed or sort of exploded yet is that they don't enforce the laws. But the laws are there. So I guess when the Chinese, end up saying, okay, now we're going to enforce the laws, and suddenly what's going to happen in Hong Kong is, so a lot of potential powder kegs, which are kind of, coming up there. But I still think for the most part, there's so much damage that can be done financially that, hopefully we don't need to go to like a hot war. But that financial damage, again, is going to make the current bankruptcies look like child's play. Yeah. And that's one more reason to opt out, because that's why I think physical gold and silver is just you opt out of this system, which has just become too interconnected, too over-leveraged, based on a currency which has been overprinted. And, history tells us that it's going to end up just in one way, which is going to be loss of trust at some point, and then higher and higher inflation, and people who hold it too long are basically going to lose their purchasing power with it. When it happens, I don't know. But at some point it's going to happen. And you look at gold, since 1970, it went up an average of 7.8% per year. It's an insurance, but it also pays out a good refund. So worst case, none of this stuff happens, you still aren't going to be worse off by buying some gold, most likely, or silver. And so that's the idea. I think where we are and why we're going all out and building this facility, because I think this decade is just going to be the decade of gold and silver.
Yeah, I agree with you. I think it's that, and it's a decade of commodities as well, because with all this expansion, the Belt and Road Initiative, they're going to need goods, right? So I think we're going to go into a commodity super cycle, and I think gold and silver will lead the way, and that's a good place to be if you're in our business. So Gregor, thank you so much. If people are interested in your product, the new safe house you guys have coming out, whether it be the gold, silver, the other items that they may be able to put there, how do they go about reaching your company?
You go to silverbullion.com.sg, just like the metal. I like silver a lot. So. And yeah, from there you can, we now have a link directly to the safe house, which is our storage facility, linked to the reserve, so you can see some of the videos of what it's going to be like. So by November, around November, we expect to have it finally finished. So that will be very exciting.
All right. Awesome. Well, thank you so much for coming on the program again, Gregor, and best of luck to you.
Yep. Thank you.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.